Sarabjit Kour, Nangra, VP Research at Angel Broking, is now with us via a video phone link. Sarabjit, can you just talk to us about IT and pharma in such a rupee environment or where currency is 66, 66.5? You think investors would go overweight on these large exporters?
See, definitely when rupee depreciates, it's beneficial for export industries like pharma and IT. But the thing is that in pharma, the valuations are already stretched up. So I think, but the rupee is behaving in such a way that it's falling day by day. So I guess some upward revision would happen in pharma numbers in FY16, but I'm not sure of FY17 whether the trend will continue or not. And because most of our targets are FY17 based, I guess so. And given the valuation, if I look at the average of valuation P multiple of my sector, it is trading at around 26, 27 times FY17, and with a very little revision upwards expected, I guess the risk reward is not favorable in pharma. But as far as IT is concerned, I think that vis-a-vis pharma, I'm talking in comparison to pharma, IT will play out that trend very well, because in IT, two things are in favor. One, the numbers that street is expecting is very low for the year, and also the thing is that with the rupee dollar, most of the IT companies getting their revenues from dollars, I guess that trend will benefit IT and valuation. Even if I look at FY17, what I'm trying to say that even if the trend doesn't live up to FY17 and reverses, which is a call which we haven't taken as so far, we believe that there the stocks are trading, large caps are also trading at 14, 15, 17 times FY17, whereas the growth is next year is expected to be in the lines of around 13 to 15%, and ROEs which are significantly higher than pharma companies. So higher ROEs and growth which is a bit tad lower, which is getting compensated by higher profitability. I think that trade or investment argument will work, and people who want to play that rupee dollar equation will play out better in IT than in pharma. So I guess I think IT is more favored to play that trend than pharma. And in IT also, there are few stocks like Infosys, which gets 70% of its billed revenues from in US dollar. It will be bigger beneficiary compared to other IT companies. So I guess IT is our play on rupee dollar rather than pharma at this point in time.
So any major decline because of the panic, generally in such panic, we tend to see names like Infosys, TCS also fall 4-5%. Should that be used as investors for a buying opportunity in the near term?
Yeah, definitely it should be used as a buying opportunity for the investors. And we believe that these companies are blue chip companies, and they will definitely benefit, just that this year's growth is tad lower than last year. I think they have been punished far more than what they should be. And actually, IT, I think, is becoming more of a value play, because the growth numbers are not that significant as it used to be earlier. And it will not be the case, because size of the industry is grown much beyond. They are bigger companies now. Infosys, TCS, these are all billion-dollar companies. So for them to grow on 20% is difficult. So what growth they are giving in terms of adjusted for their size is definitely decent. And there's no compromise on profitability by any of these companies. So there's no cause of worry in terms that the profitability will dip sharply. And they are getting into new avenues to make sure that, the profitability also remains intact. So I guess so. It's a dynamics wherein I think the sector is definitely a good value pick, and also even if the trend is not favorable and still the stock are falling, I think it's a good opportunity to get into then.
Right. Just a last word on the emerging market exposure that they have, because most of the other emerging market currencies have also been quite volatile. Are you worried about that, or it's quite small, unlike pharma?
Emerging market is more predominant in pharma, I would say, That too in few companies. The companies I track, like Dr. Reddy, always gets affected quarter on quarter because of that exposure. Even Sun Pharma, after the acquisition of Ranbaxy, is getting exposed to that part of the world. Lupin, amongst the large cap, is getting exposed to. So pharma is more exposed to emerging market economics and currency, and in IT only I think TCS to some extent is there, and otherwise most of the large IT is more towards Europe and US region, and where we are seeing clearly rupee depreciating vis-a-vis those currencies. So I think emerging market currency is more to do with the pharma and less to do with IT, unless it's stock specific. And in terms of pharma, also one trade which will benefit them is raw material, because majority of the companies get their raw material from China. So with imports getting cheaper, I guess they will benefit there also. But it's a trend which I don't know whether, as I mentioned earlier, we as an analyst look at a year ahead number. I don't know whether this trend will continue next year, because this is a very volatile environment which we are living in vis-a-vis currency, and we are seeing that in terms of currencies happening, which is reflecting their either economic strength or adjusting to their economic strength. But net, I think the trend will be beneficial in terms of both pharma and IT. And the stance is that if you want to play that currency effect, you're better off in IT actually.
Right. Thank you so much for joining us here this morning and explaining what should one do in such a volatile currency environment as far as IT and pharma, the big exporting sector here in India, is concerned. We're taking a quick break. Coming back in 2 minutes. 292 odd points decline as far as Nifty is concerned. Don't go anywhere. On the other side of this break, Anisha and Hina would be coming in, and they will be taking you through all the action in the markets.